Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Thursday, the 24th of September, 2020 at 6 p.m. All right, so a day of some green in these markets and a number of the SPDRs, and of course in the ETF main indices. They were up today as well. But 1 day or 2 day doesn't prove anything. As I've just done my futures videos, you're still very much in a downtrend in the stock indices, but you're in an area, I think, where you're getting nibbling in the market. You know, you get a 13% decline in the NASDAQ, people get interested. Yeah, it's a correction stage. Anything beyond 10% is the way the thinking goes, and this gets you interested. The danger in all these markets is here we are, just 5-6 weeks out from the election. We don't have a new CARES Act. They're still talking. Ms. Pelosi, I understand, is going to release a new plan, Democratic-based only, of $2.4 trillion that includes money for the airlines, that includes more money for people. And the question is, right before the election, do the Republicans come in and agree with her, or don't they? I can't answer that. It's rough. Now, making matters worse for all of us, after next week, Congress basically goes home for the campaigns. So getting anything done between then and November 3rd, enjoy yourself. I don't think so. All right, so as we take a look at the markets, let's take a first look at the tech sector. I think you'll agree with me that at least for the moment, filling the second gap, the market just came to an abrupt halt. It just got down there and it got quiet. In order to negate the downtrend, let's first look at what negates it. You'd have to take out 114.51. That would break the pattern of lower highs and lower lows. Any move tomorrow that doesn't take out today's low will put in place higher low, lower high. So you could go into a stall as well. The resistance in the market is 116.17, which is the 18-day average of closes. So in theory, we've got downside bias since we're under that number, and that's how I determine bias. I look at the 18-day average of closes, and I'll talk to you about my charting course here in a minute, and that determines bias. It's a filter on the swing line. The swing line is down already. The market's lower Bollinger Band is right here, and interestingly, the 100-day average of closes in green is climbing above that number for the first time in a very long time. You have to go back to May in order to get to that. So it's becoming the more important support on a further break than the Bollinger Band for a moment. One way to look at it. Momentum, we're oversold. Both numbers were under 20, so in order to embed, change from oversold to locking in a trend, a downtrend, and that's what happens. You can go from oversold and get a correction, or oversold and lock in a downtrend. Both numbers have to stay under 20 several days in a row, and you've not done that. See this number of 21? Not done it. Tomorrow's a real important day. You have the same issue going on in the futures part of the market. Tomorrow's a real important day. A down day tomorrow locks in a lot of bear trends. An up day tomorrow in a lot of these markets puts those to the sideline for the moment. Doesn't mean you've left the overall trend, but locking it in the momentum term of the slow stochastics, that would be thrown out the window. So very important day tomorrow. When we look at the SMH, oversold, downtrend, lower highs, lower lows. To negate the downtrend, the market needs to take out 170.65. Now, the 18-day average of closes is going to drop a little bit tomorrow. And the reason I know it, it's of closes, and you can see what numbers you're going to drop off back here. So you're going to drop a bit in that number. Any close with today's low of 164.10 that doesn't take out today's low and closes over 170, let's call it 170.69, still the same number, turns the chart actually bullish. So that's something that I'm looking at. I am not a bull in the market yet. It's oversold, still in a downtrend, but I know what could turn the market. When I come over to XLI, not the same case. You have lower highs and lower lows in the market. It is oversold. It's hit the Bollinger Band here, here, and here. It keeps hitting it each day and pushing on it. slightly down each day. The bigger supports all the way in this market, 72.30 to 71.55, but I don't think you're going to attract a lot of new short sellers other than you get a piece of real bearish news in the market that drives people into, or the algos into doing something. That's because you're oversold already. In the energy sector, still very bearish, still riding the lower Bollinger Band down. Can't even get over this 18-day average. You had a crossover back here where the red line got under the 100, and ever since then the market continues to fall. When I look at the makeup right here on the close, both numbers under 20 today. Both were under 20 yesterday, and the day before under 20. That's an embedded reading. Embedded means until the red line closes back over 20, each hard rally in the market, and hard could be, a couple of dollars, I think is going to get sold by the pros, and I think the pros will bail if the red line closes over that, but without it, I think they're aggressively selling into it, looking for retests of the Bollinger Band. So rallies in that market, be careful. I think you got, as I call it, the smart money waiting to hit it again. You're still in QQQ in a downtrend, but an oversold one. While both numbers were under 20 today, they yesterday were under 20, and the day before they were not. Tomorrow's super important. Same thing's going in some of the futures, so you've got to keep your eye on that. We have a pattern here, though, that is still overall bearish but oversold. It could embed tomorrow. That'll change my approach to the market. If it does, you don't embed most of the time, especially in stock indices, to the downside. They've overall been bullish and have refused to get bearish embedded readings. In the emerging market, you're into a support zone. Between the Bollinger Band, the gray line, the 200-day average, and the 100, look for short covering from this point right down to there. I don't see any reason to be a buyer, but I have no reason to be a short seller anymore. I think the smart money's covering their shorts. GLD, oversold, in a downtrend, in a breakout from this sideways action. So this market is still quite bearish. It's got how many days under the Bollinger Band? Today, the market closed 175.44 under the Bollinger Band. Yesterday under it, that's 2 in a row. This day was under it 3 in a row, and this day was under it 4 in a row. In the futures markets, it's very rare to get 5 in a row. The market normally moves to the right-hand side. I also think in this market that you're going to see longer-term traders step in if they get down to 173 and begin buying for an investment idea. Forget trading. I'm a trader type person. The investors will look at that market at a key moving average that they haven't been able to get back on an entry like that for months on end. That's why I think they'll do it. The gold miners, it's probably happening, the short covering right here, and that thought process right now. That's the combination of the 100-day and the Bollinger Band. You're not hearing me say I'm bullish. That is not what I'm saying. I do understand the difference between an investor mentality and a trader's mentality. Investors they don't care if the market's going to drop from here, for example, down to 33. They'll look at it as more of a buying opportunity. As a trader, you've got to say, well, why am I even buying that market? Different mentalities, but if you don't understand them both, you don't know what's at work in the marketplace. When we take a look at TLT, this is just sideways action that is trying to resolve with tonight's play to the upside. You finally got higher lows and higher highs. We haven't had that for a long time. If this goes higher, that means the market's worried about what? What are interest rates going to do, blah, blah. We won't be seeing both Fed Chair and Mr. Mnuchin in front of Congress for a long time. 3 days this week, Tuesday, Wednesday, and Thursday, they were there, so that's out of the way. If you take out 163.48, you break this pattern. If the pattern can continue, look for resistance at the upper Bollinger Band, which is 165.83. In FXE, you now have 4 days, well actually 3 days in a row under the lower Bollinger Band. Tonight's settlement at 109.87, just under it. I think we're at a point where the market has to decide, does it put in another day or is it ready to just move to the right-hand side? Moving to the right-hand side isn't bullish. You're still very much in a bear play that is broken out of sideways action and rallies in this market. There's probably a lot of people caught that are waiting to sell into this market. I think you caught the general public in that type of marketplace. You know, as I talk to you all these patterns, I've got my charting course that you should be taking, in my opinion, to learn the different things that we do. You're going to find that be you an options trader, be you a stock trader, an ETF, a SPDR, a futures, I teach you how to work with swing lines, all the different moving averages I use and my take on them, the tricks of the slow stochastic, the overbought, oversold, and embedded. Then I teach you about the Bollinger Bands, how they work from my perspective, which is different than a lot of them. Window envelopes, something you don't see on most of the financial TV shows, but they're used. Kramer uses them. I mean, a lot of people use them. And they're standard deviations from an 18-day average of close to give you ideas where support and resistance might show. Included in the course is the charting software. We charge $100 a month for it. It's included. My research, that's included in it if you haven't taken my research. And the course itself, $199.95 for 6 hours of videos. Access to us via webinars, where we have a webinar. You can ask all the questions that you want. I'll be having one very, very shortly, probably next week is what I'm thinking. So, good time for you to treat yourself. $199.95. I think you're going to learn a lot and it won't go away. www.iraepstein.com under the word education. Have a great night.